As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the global. As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study Exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Good evening, dear professional colleagues, students and friends of our great institute. Ladies and gentlemen, you're welcome to another episode of ICAN on AIR. Today, Thursday, the 30th of March, 2023, and the last episode in the Marvelous March series, proudly brought to you by the Institute of Chartered Accountants of Nigeria. I am your host, Olamide Balogun, FCA. Our topic of discourse on today's episode is titled Financial Modeling Opportunities for Professionals. Financial Modeling Opportunities for Professionals. And our guest, who is scheduled to help do justice to this topic, is no other person than Mr. David Brown, FCA. A brief profile of Mr. David Brown, FCA. Mr. Brown worked for Anderson and KPMG as a tax and corporate finance consultant. He also worked as an international consultant to the World Bank for 7 years. Mr. Brown had been building robust analytics systems for a worldwide clientele for the last 15 years with DB Brown Consulting as the managing partner. He's involved in training corporate clients and managing academies. He's also into tech, financial modeling, and productivity courses. He manages one of Nigeria's largest e-learning platforms, that is officetraininghub.com. He has been awarded the Microsoft Most Valuable Professional for 4 years running. He is an accredited master trainer and master instructional designer with the Association of Talent Development, ATD. He has over 20 plus years experience in training and consulting. He is on multiple committees and boards. He is a member of professional bodies, to name a few, CFA, CITN, and of course, our great institute, the Institute of Chartered Accountants of Nigeria. He has trained more than 20,000 people for free on analytics and hosts webinars weekly. He is an advisor and consultant to Nigeria Governors Forum. Wow, what a rich profile that is. Ladies and gentlemen, I'm sure we are all gearing up for a great session this evening. Let me go on a quick commercial break. As we always advise, this is the platform for you to bring your goods and services as we are globally viewed. So I'll go on a quick commercial break and I'll come back with our guest segments. Please stay tuned. I'll be right back. Welcome back, everyone. And just as I promised, our guest is in the studio, Mr. David Brown, FCA. Welcome to ICAN on Air.
Thank you very much. Can you hear me?
Yes, I can, loud and clear.
Great, great.
Such a pleasure to have you join us again. And like I always tell our guests, one of our precious or limited resource that we have on this show is our time. So I'll just dive straight into it. On 22nd of February 2022, wow, we actually had you on ICAN on Air, where you took us through the
Yeah.
ABC of financial modeling and what professional accountant needed to know. Our global audience are actually yearning to have you
Oh,
for another dose, and we are grateful that you oblige us this precious time of yours again. Let's start by refreshing up this way, sir. What is financial modeling, and what are the types and components of financial modeling?
so financial modeling, it's everybody has his own definition, but for my definition, it's a process of helping you make business decisions with numbers, with financial numbers. So yeah, it's just a process for helping you quantify data, use data, financial data to help you make better data-driven decisions. And it so happens that financial modeling, why it's financial, is the outputs are financial statements. So you have P&L, balance sheet, cash flow. You must have at least those. But then those three financial statements are used to build other, I mean, you do valuations out of that, you do all sorts of analytics out of that. But to be called a financial model, you should have some financial statements as your outputs.
Wow. Briefly put and straight to the point. And please, could you run our global audience through the nexus between being a certified financial analyst, CFA, and the Financial Modeling Institute?
Oh, okay. So CFA is Chartered Financial Analyst, which is a designation by the Financial Modeling, I mean, by the CFA Institute. So CFA Institute, you become a CFA charter holder, and CFA is more focused on finance. You know, our great institute, ICAN, is an accounting accreditation, right? So you become a chartered accountant, you become an ACA. So these are to, and then in the you also have chartered management accountant, CIMA. You have other different kinds of tax, some chartered tax. So but financial modeling is a bit different because it has the skill sets you require for financial modeling. You need accounting skills, you need finance skills, you need corporate finance skills, you need Excel skills, you need to use the spreadsheets, you need Excel skills, you need critical thinking skills. So you need a lot of skills to be able to then them together to now become a financial modeler. So it's only until recently that a professional body was formed to formalize the actual validation or accreditation of people's skills. That is called the Financial Modeling Institute. It's based in Canada, but it's a global institute. And what they do is because financial modelers, everybody builds models differently. So they're not saying build models the way we build models, but build models that follow certain principles, right? Those principles allow people to understand your model. You will be able to build in a structured way. It's transparent. So there are certain standards that are required. It's printable. So some people want the entire output of the model to be printed like a book and they read through the model. So they have kind of put together a knowledge base, and then they've created three accreditation levels. So the first level is, if you want to check online, go to fminstitute.org or I think .com, financial modeling, or just Google Financial Modeling Institute. So they have exams just like ICAN and stuff, also like CFA Institute, where you do the exams and then you'll be given a designation. So they have the first designation called Advanced Financial Modeler. The second designation is called Chartered Financial Modeler. Then the third designation is called Master Financial Modeler. Now, but the third designation, it doesn't need an exam; it's more experience. So I think like FCA, the first and second designation are very technical. But just like I was talking to the CFA president, former CFA president, worldwide president, many years ago, we're discussing why is it that chartered accountants, chartered financial analysts, and all these people can't seem to model reality. So they model what it is they want to do and use that model to make better data-driven decisions. They didn't have that skill, and he told me something. He said that the reason it's not easy for some of the chartered accountants and stuff to test modeling skills is modeling skills are practical. You need to be able to go to a computer and build a model. It can take you days, weeks to understand the business and build a model. So how do you test that? So I now told him that, okay, but there's an institute called Financial Modeling Institute, and what they've devised is their exams, and they're not multiple choice. It's not theory. They will give you financials of a company with some assumptions, and then you will need to build a 5-year model in Excel. From a blank spreadsheet, you build a detailed model over 4 hours. So it's a proctored exam. They will you'll be on, you like you're looking at me now. They're looking at you, looking at your screen to make sure you're not cheating, and you build a detailed model over 4 hours. Once you finish it, you send the model to them. They'll get an expert to assess your actual model and see whether or not you pass the grade to become an advanced financial modeler. So it's a very rigorous program. So they financial modeling institute. I've been modeling for like 20 years, but this is now the most formal way to assess people's competency, and then to now give an accreditation that, hey, yes, you can build a model. But if you don't already have accounting skills, finance skills, corporate finance or stuff, you don't think you have hope to become a financial modeler. And ICAN, of course, we're all chartered accountants, so we're right there.
Oh, wow. What a brilliant way to help us analyze how we can go about it. First of all, you need to be, get the advanced, and before you now move towards the master class, like you said, and the skills that we already have as chartered accountants puts us in a
Very
pivot.
valuable.
Yeah, very valuable one. Thank you so much, sir.
Yes, yes.
To my audience, we are being joined today with by Mr. David Brown, FCA Academy, who is taking us through financial modeling opportunities for professionals. And I dare say that it's been a very enlightening show thus far. Keep your questions coming. Our guest is on ground to take them as the show goes on. Sir, please, could you tell us how your knowledge of accounting and being a fellow of the institute has helped your career as a financial modeler of notes?
Oh, well, thanks a lot for that. Thanks. So accounting, I studied accounting in Bayero University, Kano. I finished in 99. And I now discovered that after I read accounting in the university, I couldn't call myself an accountant. I felt like, what? I did 4 years here, and you guys say, and I'm not an accountant. So, no, you have to do ICAN. So, and then realize that accounting itself is a profession, and there's certain things you need to go through apart from the university to become a chartered accountant. So I went ahead, of course, and got my charter ICAN, and it has really helped in the sense that when it comes to business, the beginning of business are the numbers, right? You take financials, that's the start of business. So if you want to be very vast in business, anything business wise, you need to understand the numbers. You need to be able to read the numbers. You need to be able to read the financial statements. You need to be able to compare. There's so many things you need to be able to do, which being an accountant gives you. So I already had that already, that foundation knowledge of, or not foundation, really advanced knowledge of understanding the books, how to put them together, how to audit them, how to analyze shenanigans in the books and see where funniness is happening. You do ratios. So we got that foundational knowledge as an accountant. Then in my career, I joined Arthur Anderson, and I became a tax expert for a while. Then I became a corporate finance expert for a while. During those Soludo times of the consolidation of banks, I was doing some of those consolidation work, merging banks together and stuff. So the foundation of accounting just makes it so much easier. So I'll say, yes, being a chartered accountant, ACA and FCA has significantly helped me in my career. Yeah, for sure.
Absolutely, absolutely. And I mean, many professionals still see or view financial modeling as very difficult. I mean, you've actually
Mm.
alluded to that initial, but please, could you help demystify it to us and to all our viewers who are ready to actually follow you to the classroom right now? What does building financial models mean, and what are the steps or guide in building financial models?
Good. So I'm going to assume that our audience are accountants. I'm going to speak to you guys as accountants. Sorry for anybody that's not an accountant. This is ICAN on air for accountants. So you can read accounting a little bit if you get confused, but don't worry, I'll help you out. So first step is really, okay, what's the historical financials? What are those historical financials that you have? So get an audited account. Get out an audited account and have a look at it. Understand, before you even go and building model, understand the business. What drives this business, right? And accountants say something, they say above the line, below the line. What above the line means is in your profit or loss account, there are line items of your financials above the line, which is revenue and cost. So revenue and cost of sales, revenue and cost of sales, and you have gross profit. Gross profit is the line. Then below the line transactions, those below the line items are things like selling, general and admin expenses. There's some depreciation lines there as well. There is tax, there is interest income, interest expense. Those are below the line. So as a modeler, you want to start building a model, understand the above the line well. That above the line is super critical because below the line is mostly the same for every company. Every company in the world's below the line is usually very similar, right? Regardless of what industry they are. But so concentrate on above the line. That's when you understand what's the business model, not financial model now. What's the business model? How does this business make money? So take a bank. Every business has revenue and then cost, and then you have your gross profit. Revenue is break down revenue. Revenue is simply price times quantity, regardless of your business. Price times quantity. So as a modeler, you're saying, okay, I'm modeling price going forward over the next 5 years. What's price going to be over the next 5 years? Think about all the things, all the variables that are going to affect price. Yeah. Okay. Price. Maybe inflation will affect price. Maybe our competitors will affect price. So how are you going to model price going forward? That's what you should think. As you think it, you build it, basically. Then you have quantity. Okay, what's going to affect quantity going over the next 5 years? What business am I in? I'm a manufacturer. Okay, well, capacity utilization of my factory is one. Definitely competition is another one. Demand is another one, right? If I'm a service business, okay, what affects quantity? How much can I serve? If I have 5 staff, how many hours in the day are they working? They're working 8 hours a day, 8 times 5. Okay, not everybody will work for all the time. So you have a capacity, still a capacity thing there. How much time do I have? So you're breaking down the line items of your financials, understanding each line item. And one very important word for modeling is driver. Understanding what drives each line, breaking it down, then understanding what drives the thing you've broken down, breaking it down some more, but don't go too deep. Or in fact, you'll never finish your model. So if I have already understood price and I said, do you know what, this company is very mature, I don't even need to do price and quantity. I'll just take revenue and I'm going to grow revenue by 2% for the next 3 years or 5% for the next 3 years. That's, yeah, a modeler. You've projected revenue over the next 3 years. Why have you done that? You need to go give yourself what validates you saying, hey, it's going to grow by 5%. Well, you analyze the historicals. So that's why you take the historical financials, check how much was their growth rate over the last 5 years, and say, okay, maybe this is a predictor of growth going forward. So it's such an interesting field because there are no two models that are the same. But one important thing when you're modeling, when you make those assumptions, you need to build what we call scenarios into it. You need to be able to say, I mean, be right, I may be wrong, I may be up by 2%, 5 by 3%. You build in scenarios and allow users of your model to be able to take best case scenario, worst case scenario, and just the model then updates automatically when someone picks those scenarios you have. So really that's it. That accounting knowledge really helps you. And what you're doing as a financial modeler is projecting every line item of your financial statements. All the line items of your P&L, all the line items of your balance sheet, you're projecting them to the future. And you need to be able to understand the business model, then understand what are the drivers of this business, and then let's project going forward. So that's in a nutshell what you do as a modeler.
Wow. And one phrase I would take out from that side is that you said, as you think it, you build it. Because I mean, I love that. Yeah, it's something to
Yeah.
work with really. And
Yeah.
with that being said, what advice do you have for people seeking to become financial modelers? Because quite a lot of our viewers are thinking along
Yes.
that line right now.
And before I even answer, I just have a question about, I want to know more about valuation. If you don't
Oh,
mind, let me answer that bit. So
absolutely.
valuation is, you see, as I said, you have financial statements, P&L, balance sheet, cash flow. That's the foundation of a model. Now, what comes
Now,
out
what
of that
comes out
is,
of that is,
okay, I can hear
okay,
myself,
I can hear
but
myself, but
okay, I think
I
I'm
can
I
hear
think
you.
echoing.
I'm echoing.
Okay. All right. Can you hear me still?
Yes, I can hear you
Oh,
loud.
okay. Great. Great. So evaluation is another field of finance, very important field. What you're doing with projections going forward is you're projecting, oh, I think profitability is going to keep on going up. We made $1 million this year, make it 2 million next year, 3 million. You're going forward. And now valuation is basically saying, hey, what are you worth? Me as a company today, what am I worth? Now, one school of thought says what you're worth is what somebody is going to pay for you. Pay you. Somebody comes and says, I want to buy your company. And said, I'm offering you 200 naira. I mean, if you accept it, that's what you're worth, right? So that's what one school of thought says. Of course, if you go to an auction, probably you get what you're worth. But then you don't want to sell, you just want to know what you're worth. And what a school of thought which makes sense is you're worth whatever the current value is of all your future cash flows. What's the current value of all your future cash flows? Now, you have to ask yourself, what do I mean by future cash flows? Who owns the business? There are two sets of people that own the business. You say equity holders own the business. Yes, but debt holders, they also have an interest in the business. Who funds the business is who owns the business. There are two types of funding, equity and debt. Now, obviously, equity are the technically the owners of the business. But sometimes, I mean, when things go bad, you need to pay those debt holders. So you could say there's the debt and equity side of things. And so you need to identify, okay, what return do these equity holders need to be able to give you money to run this business? What return do these debt holders need to be able to give you money to run this business? So that return is a return, right? At the end of the day, you kind of blend those two returns, the return from the equity holder, the return from the debt holder, and create a rate of return that is required, right? That's called a weighted average cost of equity, a cost of capital. Cost of capital, WACC, weighted average cost of capital. What return does the equity holder need to be able to give you money to run the business? What return does the debt holder need to give you money to run the business? Together, you kind of calculate something called a WACC, weighted average cost of capital. Now, capital, as I said, is the core thing. You're financing by equity or debt. So that return, that rate is very important when you're trying to project what your company is worth now. Because if that's the rates they require, okay, what you're going to discount, you're going to basically discount all the future cash flows by that rate going forward to today, right? Now, if you take your model and you do a model for 10 years, at the end of the day, if you think about it, 10 naira in 10 years time, what's it worth today? Not much. 10 naira 10 years time, when you discount it to today, it's like projecting 1 naira. If you take 10 naira today and project it 10% going forward up to 10 years, that 10 naira probably will grow to, I don't know, who knows, maybe 15 naira. Let's guess 15 naira in 10 years. So 15 naira in 10 years is worth 10 naira today. That's what discounting means. So what you do is take all your future cash flows, get a rate to discount it to today, and then that is what you're worth. But after 10 years, you're going to live, hopefully a company will stay till eternity. Who knows? If you're an oil and gas company, your well will dry. It will dry after a while until the next well is dug. So what you do is take all your future cash flows, get a rate to discount it to today. In summary, some tools for valuation. One is called the DCF. I can hear myself again. Okay. So there's discounted cash flow valuation, which is the future value, all the cash flows in the future, you're discounting it to today. That's one of the most popular. We also have dividend discount model. You're not discounting your cash flows, you're discounting the dividends that you're paying to shareholders. Every year you pay dividends, dividend. You're discounting all of them to today. That's the dividend discount model. You could also do comparable, you could do COCO and COTRAN valuation, comparable company and comparable transaction. You see a house, how much is this house worth? Oh, the house next to it, which looks exactly the same, sold for $2 million. My house is worth $2 million. That's a comparable transaction, right? You could do a comparable company. You could say, hey, this company just sold. Their EBITDA is currently, they sold for 200,000 naira. And their current EBITDA is earnings before interest, tax, depreciation, and amortization, is 20,000 naira. If they sold for 200,000 naira and the EBITDA is 20,000, they sold for 10x. 20,000 times 10 gives you that value that they sold for. So if they sold for 10x, then that means my own EBITDA is 10,000. I'm worth 10,000 times 10, 100,000. So that's another way to value. You're using multiples to do evaluation. Valuation is a big topic, very interesting topic, but at the end of the day, it's saying, what am I worth today? Right? That's the key. So thanks for that question, Adejo. I'll get back to your question.
Thank you. Thank you so much for picking that up. My question was, what advice do you have for people seeking to become financial modelers?
Okay, so seeking to become financial modelers. If you are not already a chartered accountant, go and do ICAN. That's first. That's first advice. go go and try and become a chartered accountant. It's really valuable to have accounting knowledge. So first thing is go and get the knowledge, the tiny pieces of knowledge you need. Accounting, go and try and you don't need to become a chartered accountant, but at least get some accounting knowledge, get some spreadsheet knowledge, know how to use Excel very well, because that's your primary tool. Of course, you can use Google Sheets too, but you know how to use spreadsheets well. So become know accounting, know spreadsheet generally, and then read about business, understand how business is run. If I give you an insurance company, I should be able to ask you, how does an insurance company make money? Have an interest in understanding how businesses make money, right? So all those things are not modeling yet, but you would need that skill set. Now once you get that skill set, the next step for you to do is, okay, start building models. And there's so many free resources online. I'll probably give you a link and stuff. I'll probably give you a link you can share on YouTube, so you can I'll, you download a free model. I'll put a free model there. There's some blog posts I have on our website. If you check dbrownconsulting.net, I have some free resources there. But the key is, do learn modeling. Go and learn how to build financial models, a technical thing. So you're learning the technical side of it. If you notice, I started with learn accounting, learn this. Those are all general knowledge things. Many people jump to the technical and they want to go and build in Excel. Yes, you will be a modeler, you can mechanically build it, but you're not doing critical thinking. So I think you have to have the two. So the technical skills, you can get a course to do it. In fact, we even have something special for anybody in Africa that probably I'll talk about later, a special thing we did with the Financial Modeling Institute. So Financial Modeling Institute is a global body. We did something with them to try and significantly reduce their exam fees, and then we too significantly reduced how we train modelers, and together we created a package for only Africans. And that package allows you to learn detailed modeling skills and then get assessed, do the exam to now get the certification. So go and learn the mechanics, but also be interested in business. Understand accounting a bit, understand spreadsheets a bit, and be interested in knowing how businesses make money.
Very well put, sir. Understand accounting and understand how businesses make money. This will really help in building a very good and viable financial model. And I'm sure our global viewers have been pouring in their questions, but I'll be sieving through them gradually. Also, what are the benefits of financial modeling, and what are the opportunities for professionals to actually hit it home now? Yes.
Oh, okay. So benefits of financial modeling. Well, again, I'm going to do it with the eye of an accountant. I'm pretending we're all accountants here, right? So first of all, of course, it actually polishes your accounting. You become a better accountant if you're a modeler. So your eyes, because the thing about accounting is, our book, IFRS, everything is IFRS. And we tend to be very narrow focused on IFRS. So, no, you can't allow that. You can't put that into this line item. IFRS 22, IFRS 33 says this and that. We tend to forget that we're accountants to a business. So I think accountants follow that book so much that they forget to step back and look at the business as a business and say, okay, this line item that we're putting under finance costs, like for example, derivatives, we'll go and put derivatives under financial expense. Finance expense, you see finance expense for a company, 200,000 naira. 200,000, and then you see probably revenue, pre-finance profit before interest and tax, a certain value. Then you say, oh, the cover ratio is this. The cover ratio is not that. Oh, sorry. Can you hear me still? A call was coming in.
Yeah, I can hear you loud and clear. Please go on, sir.
Okay. All right. So as an accountant, you will see, oh, this line item is derivative. So let me try and cut this line. One second.
Not a problem.
Hello? So sorry. I will need.
Okay, thank you, viewers. You usually have just a little bit of technical. We'll go on a quick commercial break and we'll be right back. Please stay tuned. Just a brief commercial break. Welcome back, viewers. And I'm sorry, you were just trying to finish your thoughts as regards to what people can do, those who are seeking to
Okay,
become
what people
financial
can
model.
gain. Oh, okay.
Yes.
So
Yes,
sorry,
yes.
I got a call on my phone and I was using my phone. So yeah, so let me just go straight to the point. Accounting, your accounting will improve. As a financial modeler, you become a better accountant for sure, and you become a better accountant that supports the business, the strategic initiatives of the business. Because when you add modeling to accounting, it's like adding strategy to accounting. So you become strategic. Movement to CFO is kind of closer, and really, I'm really telling you that that's what how it will improve your accounting. Then you could take corporate or commercial banking or private debt. Any line, any role in corporate commercial banking and private debt. Corporate commercial banking and private debt rules focus on providing loans to projects and companies, in addition to analyzing and quantifying or qualitative aspects of companies' performance. Right, being a financial modeler allows you to that qualitative aspect, the analysis and stuff, makes you a better commercial banker and a corporate banker. Corporate, even corporate development in general. You anything corporate development helps companies acquire other companies. You want to kind of buy other companies and stuff. As a financial modeler, you're able to see the synergies in those different companies and then advise the company on mergers, acquisitions, and stuff because you're a financial modeler. Financial modeler, you could enter into equity research, sell side research, for example. These groups are responsible for analyzing specific sectors in the stock market, and we typically cover about 8 to 20 stocks. As an equity analyst, you cover about 8 to 20 stocks in stock market, become an expert such that up to the level that when you give advice, people actually listen to you. Why? Because you built models for these companies. You build models as the companies do their calls. When you're on the stock exchange every quarter, a top exec in the company, mostly the CFO, needs to make do revenue calls and other calls where you're now listening to those executives, pulling the things they say and going to update your model. Then you now advise whether or not people should buy or sell the stock. That again, being an equity analyst or equity research analyst, you need modeling. Financial planning and analysis, FP&A. If you check FP&A specialists, all of them need modeling skills. In fact, this is one of the skills you need solidly. You want to do budgeting, you're doing the budgeting and analysis for your company, you need modeling skills. So FP&A professionals, I think, are the ones that need it the most. Hedge funds, you hear of hedge funds. Hedge funds manage pools of money on behalf of investors and buy or sell short marketable securities such as stocks and stuff. To understand that quantitative side of a company, you need to be able to do DCFs, that's dividend discount models, cash DCF valuation, or the valuation stuff I already talked about, right? You need that knowledge. So you need modeling skills. Investment banking, you need modeling skills. You need so much modeling skills. You're doing an IPO. An investment banker does IPOs. You capital raising, M&A, all of them require modeling skills, solid modeling skills. Private equity requires modeling skills. Venture capital, you require modeling skills. So what have I said? You have venture capital, you can enter into venture capital, private equity, investment banking, hedge funds, financial planning and analysis, FP&A, equity research, sell side, buy side, corporate development roles, corporate or commercial banking, and of course, be a better accountant. Opens the doors.
Wow, that is indeed a lot of opportunities at our fingertips. If only we are just ready to dive into it. And I'm sure all our viewers are actually taking their time and will definitely take advantage of this great opportunity you're presenting to us. Sir, are there programs that one can actually engage in that you can run us through briefly, or are there newer ones? Because while you were here last year, you spoke about some programs one can take up to become a good financial modeler.
Yeah, so last year we also got comments about it when I mentioned, like for us, our firm, D Brown Consulting, we're known for financial modeling. We've been doing it for 20 years now, and we built a very solid methodology. But a lot of feedback we got was that it's too expensive. Many people cannot afford it. Now, modeling, some people want one on one training. It's not cheap to get somebody like myself, for example, one on one. My hourly rates are very, very high. So, but at the end of the day, it's a skill that I know lots of people need. So that's why for the last year, we've worked with the Financial Modeling Institute and ourselves to come up with something, to come up with basically a special package. And that package is called the Financial Modeling Academy. So it's one of its kind anywhere in the world. And what we've done is we've significantly crashed the price of the exam, and then we've significantly crashed our own cost of doing things, and we've come up with an 8-week program. It's only going to run twice a year. Once people get into the program, it runs and that. So for the rest of the world, we charge our standard rates, but for any African, we have a massive discount. And so the program is very, very detailed. It will teach you to become a world-class modeler. Once we finish teaching you to become a world-class modeler, we'll now take you through step by step how to pass the exam. We take you through the exam question is like this. This is how you make yourself a faster modeler and everything, all the tricks. We give you the tricks, then we do mock exam with you, detailed mock. And then after the detailed mock, we now hand you over to Financial Modeling Institute. They too will give you content, they'll put in their community, give you another mock, plan, prepare you, and then you do the exam. So after that, I am sure you will get the certification, but for a fraction, I think 10% of the cost that it will cost you if you are going to do it just on your own. So yeah, I will recommend the Financial Modeling Academy. It's a program we have. I probably and what we've done is for Africans, we've significantly reduced the price. So we slashed it completely. So it's like $2,300 worth of value, and we made it $340. $2,300 down to $340. But what we also did is for students in university, or for an ICAN student. If you're an ICAN student and you're writing ICAN exams and you can prove it, we'll give you a student's discount to $150, like 120K, for something that's worth almost $2,300. It's only an experiment we're running with the Canadian-based Financial Modeling Institute, only for Africa. Anybody outside Africa can't do it. So that's what our advice really, if you're interested. But there are many other courses online. If you Google financial modeling course, you will see it. But I think this is the cheapest available anywhere in the world.
Absolutely, and it's real value for money because you're really impacting a lot of people. And as a financial modeling professional and coach yourself, is Nigeria in deficit of financial modeling professionals? Yes or no? Or what are your reasons? Very, very.
The world is in deficit, not just Nigeria. The world is in deficit of financial modelers. Do you know why? Because when you are employing someone, you ask him, how's your Excel skills? Excellent. How's your model? Can you model? Yes, I can model. And they now employ the person, and the person can model. The person can build a one forecast, a very simplified forecast, but they can't model. So the problem is, you now employ this person. What do you do? So we needed a way to validate people's skills, and I think that's what the Financial Modeling Institute are able to validate, that yes, this person has a skill. And one of the biggest problems I see is for FP&A professionals, financial planning analysis professionals, because they're the ones that do budgeting and stuff. So every year, our firm, we see so many people struggling to do budgets because it's so manual. And the reason is manual is they don't have modeling skills. You're supposed to enter a boardroom and the board says, let's change our projections to this, and this, and this. And it take you 1 week to, in seconds, you should do it. Change, everything updates automatically. That's modeling. So FP&A professionals are lacking. The financial planning and analysis professionals, the people that do budgeting, forecasting, the people that basically help you grow your business, whether it's mergers and acquisitions and stuff. Many companies now need to merge, but there are no experts in that M&A to bring those companies together, so that, because everything is so expensive nowadays, so you need to merge. We don't have those professionals. So there's huge deficit in Nigeria, but even worldwide as well.
Wow. When there's a deficit, it means opportunities abound. And once people are ready to
Yeah.
take up the opportunity, they will indeed be smiling all day. One of our regulars, Faboladin, is also is asking you a question here, sir. So what are the available options to validate financial modeling errors or mistakes to have a robust and reliable financial model?
What are available options to validate? When Let me take an example. If someone sends you a model for a deal, what I do, is I build a quick and dirty model. So if someone sends me a model, and I look at the figures, I first of all do a simple ratio analysis of it, some quick ratios. I can do analysis of the operating cash flow against the profit. think about just the operating cash flow analysis against net profit. Both of those values should move together. When I see them moving completely apart, then I know, oh, something is wrong somewhere, probably with these model assumptions. I take the assumptions that they use and I put it into my own maybe standard model and see what numbers come out. And then I look and compare the two. But then also you should learn some audit techniques on how you audit. There's one golden rule in modeling called left to right consistency. What does that mean? When you model a year, that those formulas you use to model year one, you should be able to drag all those formulas to year 10 and it will work. The formula is left to right consistent. If you do that for a model immediately and the model doesn't show the answer that it showed before, then you know the model has some technical issues. So there are quick things you can do to identify technical issues in the model and you send it back to the person that this model doesn't meet our requirements. I cannot rely on it. So yeah, those are some techniques.
Okay, very well put, sir. Before I come to Larry, that my last question. I would just like us to, because I mean, time is always racing against us. But can we discuss security briefly? And considering the level of cybercrime and the sophistication of in financial crime today, is there a meeting ground or a kind of a collaboration between financial modeling professionals and the cybersecurity professionals?
Okay, so cyber financial modeling professional and cyber security
Okay, so
professional.
cyber
Eh,
professional, cyber security
Okay,
professional. Yes, sir.
so when you see cyber crime, you can think about it like an outlier. There's cyber crime. Maybe someone stole my account details. Immediately they stole my account details, start withdrawing money. You see that I have a history. I don't have been with this bank, let's say 5 years. I don't withdraw money like that, like crazy. So there are some triggers that can happen that they could say, look, this is unusual. Let's lock the account immediately. Now, it's a model, not necessarily a financial model, that would have told me that this is my pattern of expenditure, or this is my pattern of withdrawal. Once that pattern shifts, that's where AI comes in. There's something wrong there. And you basically can see fraud happening. So even if they stole your card and everything, the data, if you look at patterns in the data, you'll be able to understand that something is going on here. Now, of course, the criminals are also very smart. They can decide they're not just going to withdraw money little, just little by little. But at the end of the day, I will be able to see that something is wrong and stop it. So, modeling is essential in cybersecurity. When you're doing the analytics of past behavior, and then you're using that to basically compare what's going on after. And when there are big variances in it, that's a trigger, and that trigger is basically how you fight cyber crime. So yeah, modeling is a key aspect of that.
Modeling is a very key aspect of that. And uh, I, I didn't know that you're a financial professional modeling coach of several years of quality. And okay, but I wanted to ask you a question, but let me quickly go to Larry down. My last question, which says, is there any difference between financial models and forecasting models?
It's just semantics. So just semantics. Now, when you say forecasting models, forecasting what exactly? We're forecasting many things. I can forecast, is rain coming? Is it going to rain tomorrow? It's a forecast, and I have a model. The weathermen, the meteorologists, they have some massive models and everything that they use to forecast. So forecast is a general term. It's more general. So financial modeling can be under forecast modeling, right? You're forecasting, but this time you're forecasting financials, right? So by saying financial modeling, you obviously have financial, so business numbers there. But modeling in itself is a means of basically you've modeled a certain behaviors and they're hoping to use that to predict the future. So we do that a lot. So all the AI, machine learning, those are models. Then you have machine learning models that basically look at patterns in the data and then learn and then move forward. Of course, you've heard of ChatGPT by now. If you haven't, you better go check it out because that is a large language model. What does it do? So it's taking the entire internet's data in English and trying to see patterns in it and then using it to actually write back to you in very human-like fashion. So those are models. So everything is models, models, models. By being a financial modeler, modeling financials, it kind of gives you a good idea how you model other things, right? So it gives you a valuable idea, but there is, you can say semantics, but forecast modeling, financial modeling can be under it because you're also doing forecast modeling of financials. Don't know if that helps.
Very well put, sir. And the questions are actually pouring in now from our viewers. Another one from Honwa Ernest is saying, sir, what are the consequences of a failed projection, especially with the unpredictable dynamics nature of business? A case in view, the collapse of the Silicon Valley Bank. Hmm.
I like that. So Silicon Valley Bank, why, why did it go under? It went under because of macroeconomic factors, right? So of course, inflation in the US, lots of inflation in the US and stuff. What does inflation mean? That means your interest rates are going to go up, which means the treasury bills that you are buying and getting maybe 1% return, you're not getting higher returns. What does that mean? It means, okay, if I have my money in my bank, I probably need to just withdraw that money and go and invest it in T-bills. I don't need to have that money in the bank. I start withdrawing money from the bank, right? Or if the bank, but what happened to Silicon Valley Bank was they basically invested in a fixed deposits. They carried a lot of depositor money, put it in fixed deposit for like 2%. 2% was really good then, for example. But then inflation rate started going up, and the return that you could get is now 4% or 5%, which means there are 2%. If they mark something called mark to market, 2% mark to market, meanwhile they're paying 4%. They're losing 2%. They can't get out of the deal because it was a locked deal. They thought it was a safe bet. And it was a safe bet then. But unfortunately, things went under. As a financial modeler or a modeler, when you see big shifts in the macroeconomic factors, your brain should just start thinking, what are the effects of these big shifts? Remember what I told you in the beginning? I said understanding business, what drives business. When this happens, this happens. So when certain things happen in the market, ask yourself, what does it affect? Sit down, think critically. What will it affect? You can start predicting the future, isn't it? Now, the Silicon Valley Bank obviously knows this. They predicted the future that things will be at that rate, or things will be stable. Probably prices will be going down, not going up. They didn't predict in their model. They didn't have a worst case scenario that the T-bill rate will be 7%. They thought maybe that's impossible, right? So they didn't put that in the model, because if they put it in the model, it will show that they're going to make a big loss. So they basically thought the probability of them making a loss was very low. And of course, things have changed, right? But then again, when things start changing and you see trends, you need to put your thinking hat on, get your management team to say, look, if this thing continues how it's going, this is what's going to happen. We need to do something fast. We need to go get buyers. We need to talk to the central bank or Fed and say, please come and help us, which is what banks do. You go and say, look, these factors are looking really bad. We are thinking that if this continues, this is what's going to happen. Can you bail us out before, or bail us in before you bail us out? There's something called bailing in and bailing out. So lots of interesting things. Again, how do you know this? You be curious about business, you understand models, and yes, you mitigate your risk that way. So have lots of scenarios, different scenarios, and say, if this happens, this is what I'll do. If this happens, this is what I'll do. And be very skeptical. Have some skeptical skills, that you have been skeptical, to try and protect your company from disaster. So I don't know if I answered that question.
Yes, you did. Yes, you absolutely did. And I know you've already touched on this question already by Jabir Abdullahi. He's saying that it seems financial modeling isn't popular in Nigeria because hardly has he seen a company seeking a modeler. Because I mean, he's
Yes.
wondering
Yeah,
why.
you're right. You're right, Abdullah, because financial modeling doesn't seem to be a profession. And the reason is most professions are straight jacketed: accounting, economics, geography, uh, just like that. And modeling requires skill sets, lots of skill sets coming together. There's no university where you can go and learn BSc financial modeling. Although I talked to a couple of universities that, look, I think your accounting, you need to have accounting slash financial modeling, BSc accounting and financial modeling, right? You know, our universities are not as fast as what the economy needs, right? So, I mean, digital marketing, which university used to do digital marketing how many years ago, right? Digital marketing is key. So, that's basically, there's one I'll give you now. Take this, go and make money with this. The Chat GPT has just come out. What are the skill sets you need for that? You need to be able to talk to chat gpt, you need to model how it now gives you good results, right? So there is engineering around that. So you need to be able to prime, or basically learn how to ask questions, and there's a profession around that. There's a profession around how you ask this AI questions in a way that it gives you the best result. It's called prompt engineering, PROMPT engineering, right? Again, so the thing is, our university systems and stuff are not as fast. right? So people's mindsets are not, oh, I need a financial modeler. They will say, oh, I need someone that knows budgeting, can do forecasting, can help us grow, has strategy, has the that's financial modeling. But you didn't know it's called financial modeling. So lack of they need it, but they don't know it's called financial modeling. Yeah.
All right, cool. And back to my own question, I was saying, as a modeling professional and coach, could you please give us like an estimate of how much Nigeria would have been breaking in if, they've paid quite sound and credible and globally recognized financial modeling institutions and professionals? Like if Nigeria actually had that working for us, what would the
Okay.
economy would have been like?
Well, the thing is, okay, for example, budgeting. I worked with the World Bank for 7 years to help basically build a very detailed model for the entire country's oil and gas. So oil and gas, every single oil company, every single oil block, on modeling them and seeing how the revenue coming to the government, what it looks like and stuff. And from that model alone, we could see clearly all the vandalism and everything. You could model it and see how bad things are. And then you could also see how good things could be with a model, right? And we'll be able to forecast our budgets, forecast our stuff even better. So having that skill set will enable us forecast better, will enable us plan better. And by planning, forecasting better, you'll be able to kind of put things in place that you need to put things in place, right? And of course that means better progress. So at least we're following a plan that is bankable, right? So that's the benefit. Not doing that, you're just hoping and praying, right? I'm not saying we shouldn't pray. Prayers is good, but prayers without action is pretty useless, right? And God says that. I don't know, I can't quote the Bible or the Quran, but I know you can't just sit down and pray and think things will happen. You need to plan, you need to focus, you need to have that thing built so that you can advise, right? So, and again, that skill set is needed. So, yeah, it's something that's truly needed. I think modelers can earn quite a lot of money. You can probably sit here in Nigeria and model for companies all over the world, model things, business plan, build a model for the business plan, and make a good living sitting here in Nigeria and paying taxes to the government while doing modeling for every other company everywhere in the world, including Nigerian companies.
Very well put, sir. We can't really thank you enough. You've been absolutely amazing. I would like you to, maybe in 2 minutes, just quickly reiterate the program that you have, because I understand that they're really interested in the special offer from FMI and your organization. Could you just give us just more insight into it
Okay.
as we gradually wrap up?
Okay, cool. So if you go to our website, I don't know, I can't paste the link right now, but if you go to our website, dbrownconsulting.net. So dbrownconsulting.net, and then go to training tab, you will see something called FMA Academy. We haven't made it any official announcements yet. Probably do the official. It's launched already. We'll do the proper launch in a couple of weeks. But it's Financial Modeling Academy, and what we've done is we've packaged all our modeling course, all our content that we've learned in the last 22 years of me doing this, and 17 years of our firm. We've packaged into an academy. And this academy, we've shortened it into 8 solid weeks. And the 8 weeks starts on the 22nd of May. But if you do early entry, it will give you access to lots of materials that you can prepare yourself before the 22nd of May. So what we'll do is on that 22nd of May, you start over every week, you're going to get content that you work on. And then by 8 weeks or 6 weeks, actually, you'd have been able to build a model for a real company's financials. Be very confident in building a model. You'll be doing that a lot of it yourself with support from your community. You're going to join a community. Every weekend, I'll probably come up like this and kind of answer all your questions and help you out. After 6 weeks of that solid course, then we'll now prepare you for the exam. We're going to prepare you in detail for the exam. So if you find out the financial modeling institute, you now write the exam, and then hopefully you get the certification. So it's the cost itself. We charge the rest of the world about $2,300, but we reduced it to $972 for anybody in the world. But then we did an Africa promo, which is sponsored by, paid for by Financial Modeling Institute and our firm, where any African resident will get it for $347. Just the writing the exam is $700. FMI's exam is $700. You're getting the exam, 6 weeks course, 2 weeks exam prep, 1 year access for $347 or the Naira equivalent. And then if you're a student and you can prove it, you need to prove that you're a resident in Africa and you're a student. Even the other African resident, you have to prove that you're a resident in Africa. You can't be in Canada and say we'll cancel it. It's only for Africans. And if you're a student, like for ICAN Tuition Center, or you're doing CFA, or you're in a university, it will give you the entire thing for $150. So that's an experiment we're running. It's the Financial Modeling Academy. Go to dbrownconsulting.net, check training. You'll see FMA Academy. I'll probably drop the link on the YouTube channel for you to register, and then hopefully you get certified. So our interest is make you certified, get you better jobs, because with that you should be able to get a better job, a better paying job. If you're unemployed, you should be self-employed. Imagine you're modeling for someone in Europe. He wants to build a model. He goes on and says, "Oh, you're a financial model. You're an advanced financial modeler, accredited by Financial Modeling Institute." He has comfort that you know what you're doing. He doesn't need to check, "Oh, where is he from, Nigeria or something?" No, you will basically be able to work at home and make a living, because you could charge some serious money to build models, thousands of dollars to build models. So it's something I think would transform a lot of lives, and that's my aim.
Excellent. So thank you so much. And just in a minute, because we'll be wrapping up in the next 2 minutes, just in a minute, we'd like to get like your advice or suggestion to ICAN on how to identify and fill gaps to upgrade our members in knowledge skills in financial modeling. Just in a minute, as we wrap up, sir.
I think if we can do a series, maybe that can, it's like something you just did now. I have to say a big thank you to ICAN on Air. I'm happy to do series of these lectures for free with ICAN, just tiny lectures that we can then upgrade the knowledge. Just tell them how to apply for work, right? You don't need, because of that skill set. Yeah, what are the kind of jobs that you can see? I mentioned quite a lot already. I think a lot of people just need education and guidance. So it's more like education, guidance, and mentorship. So if we can have mentorship sessions and stuff like that, just to guide people. People are very smart. Nigerians are super smart. They just need someone to guide and coach them. So I think coaching, guidance is what we need, and people will excel. Yeah.
Mr. David Brown, FCA, you have been exceptionally brilliant on this show, and we'll say a big thank you to you. I know you are in the middle of a conference, and you still took out the time to be with us this evening. Thank you so much for your time. We're grateful, sir.
You're welcome. You're welcome. I like Ajayi there. You type prompt engineering. Very good. Go and do prompt engineering, Ajayi. You will be making money. Nobody is doing it right now. Although I should say do financial modeling, right? But it's good. That's going to be a hot topic.
All right. Thank you so much. Thank you so much. We're grateful. And to our viewers, that's the show for today. Like I always tell you, ICAN On Air brings you quality guests where you get value for your time spent with us. And before I run off for today's episode, let me quickly do a reminder that the Institute Fellowship Registration Portal is still open for members that are eligible to get their fellowship status. The fellowship conferment itself is coming up in May 2023. So kindly visit our ICAN website at www.icanig.org to get more information. Also, our annual subscription is way overdue. So kindly do the right thing today by paying your subscription, and you get the benefits attached to it. And for the ICAN Awards and dinner, that is also fast approaching. The tickets are selling fast. Please visit the ICAN website to get your tickets. Wow, what a day, what a show. So we'll come your way again next week, Tuesday, which will be the first in the second quarter, with another excellent guest and topic. Do stay safe. Have an amazing weekend ahead. And on behalf of the editorial team and the producers, I am Olamide Balogun FCA saying thank you for staying tuned, and bye for now.